Welcome back to the channel, financial freedom seekers. In our last video, we discovered why gold and silver surge when markets crash. Today, we're taking the next crucial step, showing you exactly how to buy these precious metals like a seasoned professional. Before we begin, this video is for educational purposes only and not financial advice. Always conduct your own research and consider consulting with a financial advisor before making any investment decisions. By the end of these next 10 minutes, you'll know exactly how to acquire physical gold and silver, which online platforms are trustworthy, how to avoid common beginner mistakes that cost thousands, and the secure storage solutions professionals use. This information could potentially save you significant money in fees and protect your wealth during the next market downturn. The difference between buying gold correctly versus incorrectly can mean thousands of dollars in unnecessary premiums, potential scams, or ending up with assets that aren't what you thought. Let's make sure you do this right. If you haven't watched part 1 explaining why precious metals are crucial during market downturns, check it out after this video. Now let's dive in. There are two main approaches to owning precious metals. Let's start with the easiest. The simplest way to invest in gold and silver is through exchange-traded funds, or ETFs. What are ETFs? They're funds that trade like stocks but track the price of gold or silver. Popular gold ETFs include GLD, IAU, and SGOL. Popular silver ETFs include SLV, SIVR, and PSLV. The benefits of ETFs are quite compelling. They are easy to buy through any brokerage account, highly liquid, and come with low storage concerns. However, there are some costs to consider. ETFs usually come with small annual management fees, typically ranging from 0.25 to 0.5%. Just buy through your existing brokerage account like any stock. If you want to actually hold your gold and silver. Common forms include coins and bars. Government coins like American Eagles or Canadian Maples are most widely recognized. You'll pay slightly above the spot price. This extra cost is called the premium. Smaller items generally have higher percentage premiums. Always buy from reputable dealers to ensure authenticity. The easiest approach for most people. Use your existing account with brokers like Fidelity, Charles Schwab, or Robinhood. Simply search for gold and silver ETFs, such as GLD, IAU, or SLV. You can trade instantly during market hours just like stocks. There's no need to worry about storage or insurance, and these can even be held in retirement accounts like IRAs. You can start with as little as the price of one share, which is often under $200, and you can sell easily whenever you need the money. For buying physical gold and silver, there are popular websites such as APMEX, JM Bullion, and SD Bullion. Create an account, select products, and pay by credit card or bank transfer. The metals are shipped directly to your home. Look for free shipping deals on orders over $99, and always check the current spot price before buying. For hands-on buyers who want immediate possession, search CoinShop or precious metals dealer in your area. Bring cash for potential discounts. Check online prices before going so you know fair rates. Start with common coins like American Eagles, and ask about their buyback policy before purchasing. Best ETFs for beginners for gold exposure, GLD or Spider Gold Shares, is the largest and most liquid gold ETF. Then there's IAU, the iShares Gold Trust, which offers a lower share price and slightly lower fees. And finally, GLDM, the Spider Gold Mini Shares, has a smaller share price for easier entry. For silver exposure, SLV, the iShares Silver Trust, is the largest silver ETF. SIVR, Aberdeen Standard Physical Silver Shares, has competitive fees. And PSLV, the Sprott Physical Silver Trust, is backed by fully allocated physical silver. Key advantages: no storage concerns, highly liquid, you can sell anytime during market hours, and low minimums to start investing. When it comes to physical metal recommendations, it's best to start with small, recognized products. For gold, consider 1/10 ounce American Gold Eagles, as they're more affordable than a full ounce. For silver, 1 ounce American Silver Eagles or Canadian Maple Leafs are excellent choices. As a beginner, there are a few things you should definitely avoid. Steer clear of collectible or rare coins with high markups. Also, unrecognized brands or unusual sizes can be problematic. Be cautious of complicated purchase contracts or leverage schemes. And don't forget, physical metals require secure storage solutions. To stay safe and avoid common problems with ETFs, stick with well-established ETFs from major providers. Check the expense ratio, which is the annual fee, and it should be under 0.50%. Make sure the fund is physically backed by actual metal. Look for ETFs with at least $500 million in assets. Always buy through regulated brokers and avoid ETFs with complex structures or leverage like 2 times or 3 times returns. When it comes to safety with physical purchases, there are some red flags you should definitely watch out for. If you see prices that are much lower than other dealers, that's a big warning sign. Be wary of any pressure to buy rare or limited edition coins. Sellers who don't accept credit cards can also be a red flag. Requests for wire transfers to overseas accounts are another major concern. And promises of guaranteed returns or buybacks at higher prices are usually too good to be true. Always research the dealer's reputation before making a purchase. When in doubt, it's best to stick with major national dealers. This can save you a lot of trouble down the road. For storage options, consider walls for smaller collections. Decentralization is important. Don't store everything in one location. And keep in mind insurance considerations, as standard homeowners' policies often limit coverage. It's crucial to make sure your investments are well protected. Third-party storage can be an excellent option for securing your precious metals. Bank-safe deposit boxes are quite affordable, but keep in mind, they are not FDIC insured. Private vault companies offer full insurance and better security, making them a solid choice. Bullion dealer storage programs are convenient, though they do come with annual fees. It's also crucial to understand the difference between segregated and allocated storage. When considering international storage for your precious metals, there are a few key points to keep in mind. Geopolitical diversification is particularly important for larger portfolios. Reputable jurisdictions include places like Singapore, Switzerland, and the Cayman Islands. Be aware of the reporting requirements for foreign holdings, such as the FBAR. Offshore storage comes with its own set of pros and cons, including considerations around taxation and reporting. When it comes to tax implications, it's important to note that physical gold and silver are considered collectibles by the IRS. This means long-term capital gains are taxed at a maximum rate of 28%, compared to 15 to 20% for stocks. Additionally, some states do charge sales tax on precious metals purchases. And don't forget, there may be potential 1099-B reporting requirements when selling certain quantities. Maintain purchase receipts. This is crucial for establishing your cost basis. Document purchase dates for capital gains calculations. Keep certificates of authenticity. And consider specialized portfolio tracking apps. We've covered the essentials of buying gold and silver like a professional, where to buy, what forms to consider, how to avoid scams, storage options, and tax implications. Remember that precious metals are a long-term wealth preservation strategy, not a get-rich-quick scheme. They're insurance against economic uncertainty and currency devaluation. If you found this guide helpful, please hit the like button to help others find this information. Subscribe and activate notifications to catch future videos in our financial protection series. Drop a comment below sharing which precious metal you plan to buy first, and why. Is it gold for stability or silver for growth potential? And remember, while I've shared professional strategies today, always conduct your own research before investing. No single asset, even gold or silver, should comprise your entire portfolio. Diversification remains key to financial resilience. Until next time, keep building your financial fortress, one precious metal at a time.